Back, like I said, the market is at the low point of the morning, and a lot of stocks are under pressure, which is why you're seeing this decline. Infosys, Lever, Kotak Mahindra Bank. These are few prominent names which are down right now. ONGC, of course, still stands out on the upside. ITC is down, L&T is down. Shrikant Chouhan is back with us. Shrikant, not been a good first hour after that initial resistance of first 5 or 10 minutes or resilience of first 5 to 10 minutes. But how do you approach it incrementally and your stock calls? Shrikant? Yeah, go ahead.
Yeah, sorry. I was actually listening to the conversation with Kantara and Parley products, so sure. It was nice. Anyway, the market was like in the morning we saw a higher opening, but again now the market has started its correcting phase, and it is correcting back to the levels of 16,900, where the market is having excellent support. So we are expecting market to consolidate till the second half of the market. After maybe Europe opens, the market will take the real shape. Otherwise, we are expecting furthermore activity in mid-cap companies or maybe small-cap companies in the broader market. Large-cap stocks are not at all participating. But the interesting part is that FMCG stocks are correcting from their highs, which is a little bit unusual because I was expecting some more activity or upward activity in the FMCG companies, but they are correcting back from their highs. So in that, Britannia looks weak. We should be on the selling side for the Britannia at 3790, 3795. Very clearly, the stock can fall to the levels of 3700. We can keep stop loss around 3830 for the same. And the other stock which we like is on the buying side, it's BHEL, Bharat Heavy, which is forming some reversal formation on weekly, monthly basis. And also on a daily basis, the stock has crossed its crucial level of 60. So from here, we are expecting stock to move towards 66 or 67, which is decent upside from current level. It's a buy at current level with a stop loss at 58.
All right. Thanks a lot for that. Have a great day, Shrikant. That's Kotak Securities with their views. Let's shift focus now to the commodity markets. Manisha Gupta is joining in. Manisha, what's the one commodity you're looking at today?
Sonia, thank you. Actually, the commodity markets have opened on a firmer note today. So whether it's energy, precious metal, base metals, all of that is trading on a stronger side. But I'm talking about the industrial metals, which have opened on a firmer note for the month of October. We understand that for aluminum and zinc, those kind of metals, the smelters in Europe have cut nearly 50% of production capacity. And it has been a demand as a concern, but that seems to be picking up now and is the reason you are looking at some premium building back in case of prices. So the short positions clearly are getting closed here. Same is the case with zinc, where we have seen prices gain up by nearly $200 from $28 to $3,000 per ton in the day today. So it has been good gains in last few sessions there. Aluminum prices also have been surging up. We've seen 17-month lows in the previous quarter itself. And from there, because of the tight LME supplies, there is some support coming back here. But the best of the gains clearly have come in case of copper, where there is restocking, rebuying from China, especially ahead of their holidays. That has been supportive. Remember, China is shut for its national holidays and opens only on 7th of October right now. But when you look at the Chinese copper imports for the year until now, they have been up by nearly 7.4%. Also, there is a report from CRU which suggests that the kind of Chinese demand that we have seen will only improve going forward. So their expectation is that in third quarter, we saw demand go up by nearly 5% for refined copper there. In the next quarter, it will only get better. So if last quarter was 5%, the fourth quarter could actually be looking at nearly 9% of a demand going forward. When you look at inventories, those are also supportive as a factor. In China, the inventories are at a record low of 1.18 lakh tons, and on LME warehouses, even lower at 1.71 lakh tons, which is just about 2.5 days of global consumption. So that is where the support is coming in from. As I said, the month of September and the previous quarter hasn't been so great. We've seen a constant decline in both ways, and the major declines really coming in for something like zinc and nickel. Copper in this case also has declined the least, and copper is something that everybody seems to be betting on right now on the longer side.
Okay, well, thanks a lot for that. Let's move on now from the metal space to the gas space. MGL is down over 4% in trade. If you're wondering why, Sonal is here to give us more on that. Sonal.
Thanks a lot for that. Well, apart from the gas price hike that came over the weekend, there's an additional update as far as MGL is concerned. PNGRB has ordered MGL to pay pipeline tariff for the Uran-Trombay line, and this is as per approved date from 1st of Jan 2014. Now, it was an ongoing case going on with ONGC and MGL, and the company had already provided for it as a contingent liability. Now, this is to be cleared within 2 months, after which they will have to pay interest on this particular demand. The demand was disputed multiple times by the company earlier, but this time it seems that they finally will have to pay this amount, despite they going ahead and forming an appeal for this particular demand. As per company's notes to accounts, total demand from November 2008 to July 2021 stands at 332 crore rupees, and this implies an impact of 33 rupees per share. And analysts say that the recurring impact could be 1.5 to 2 rupees as far as their EPS is concerned. But remember, this is a one-time impact on the company if they pay this amount. However, company sources have told me that they will contest the order in higher courts, but for now, they will have to pay it, is what the sources are telling me.
Okay, thanks a lot for that. So that's in Mahanagar Gas. But Coal India is also surging in trade today. The company recorded growth in its coal production during the April to September period. Nigel tells us more about that. Nigel.
Well, that's right. For the past quarter, actually, the production numbers look quite healthy. They were in double digits. Though on the offtake front, well, it was up close to 100%. But keep in mind, it's on a relatively higher base. And in a monsoon season where you do close to around 49 million tons in a single month, the street likes that quite a bit. As you said, for the first 6 months of the year, things have looked up. Production numbers up close to around 20%, and the offtake numbers up at close to around 8%. In terms of their targets, well, the offtake number is nearly around 102% of what they initially sought out, to achieve. So they've done better than what they estimated on the offtake front. And on the production front, they stay, focused on that goal of around 700 million tons of a production target. So far, they've done close to around 43% of their target. And the second half of the year, as we always know, is a better year. So we get higher volumes in that period. So all in all, it appears the street likes it. Only factor you need to keep in mind on is the street was buzzing that maybe there could be a potential OFS from the government. There is no confirmation of that. But that was something that was weighing on the stock. So track that as well. Back to you.
Okay, thanks a lot for that. We'll slip into a quick break on that note. On the other side, our special segment, it's the economy. Lata will connect with Somshekhar Vemuri of Crystal Ratings and Jitin Makkar of